All right. Good morning, everybody. My name is Jerelyne Thomas. I am a realtor with Arla at Properties, and today we have Melanie Meyer, who is here under Edge Finance, and I am super excited to have her because we connected on the topic of veterans. I am a military brat, so I have a soft spot for the veterans. It is what I came from. I've always lived in a house that benefited from the VA benefit and entitlement. And this entire presentation is going to subject around that, how to build wealth from it, and all those other things. So if you have questions, please let them put them in the comments after you see this video, and we'll be happy to answer them. And or if you're ready to get the process started. So Melanie, I'm going to give it up to you, and if I have any questions or see them in the comments, I'll bring them up.
Great. Thank you so much for inviting me today to join you and talk about a topic that is really important and oftentimes overlooked by a lot of lenders and other institutions,
Yeah.
where they're not necessarily even asking the question about who's eligible for VA. And there's a lot of misconceptions out there in the market about the VA home loan benefit being harder to get financing with, or maybe even getting your offer accepted. So we're put together a little bit of a basic overview, and then we have a bunch of information that we can share just based on the things that we deal with on a regular basis. I've been in the mortgage business for 26 years now, and as a mother of a military person, my son was active duty in the Army branch, as well as having many other family members. Also being close to the DC area, we have so many people here that work in the market, so that are VA eligible. So I'll play this little video and then we'll wrap up with some more questions and we'll go into the different ways that we can utilize it, as well as some of the misconceptions about the program.
Sounds good. Do you know if it could be turned up? It's a little low.
So you can comfortably enjoy all the benefits a VA home loan has to offer, including no down payment, higher loan amounts, fewer closing costs, and the ability to save over and over again. You may also qualify for special refinance programs. You served your country. Now let us serve you. Call today.
So basically, that is just a really quick high overview of what you're eligible for. And something else that comes up a lot, and recent changes have come into this, is basically who's eligible for a VA home loan. And really, the only benefit is that you've served at least 90 consecutive days in active wartime or 181 days during peacetime. Um, if you're currently serving and you've completed at least 90 continuous days, National Guard or reservists that serve 6 years in Select or National Guard, or 90 days of active service under Title 10 orders, surviving spouses that are unremarried of a veteran who died in service-connected disability, or was missing in action. And then, of course, the best way to figure that out is to go and visit the VA website to pull your certificate of eligibility. And if anyone needs help with that or figuring out what that means or what information is on there, we certainly can help you with that. It only takes a couple minutes and we only need a few pieces of information to pull that certificate of eligibility in. Sometimes there will not be a certificate of eligibility on the electronic site, so we need to send in some additional information, but they're pretty responsive on responding to that, so that we can figure out who is actually eligible for the program and what your eligibility and entitlement are. So another question that we get a lot is a revolving entitlement. So we're hearing a lot of misconceptions out there that you can only use your VA benefit once, and that's actually not true. In some cases, you don't even need to sell or refinance your existing home in order to free up your entitlement to purchase the next home that you're looking to purchase if this is not your first buy. So if you're doing let's say you moved into a house in Alabama, and then you're you're moved your duty station to the Pentagon and you still want to keep your house in Alabama because it's a good rental opportunity. You know, there's lots of active duty people there that could rent your house from you. You may consider moving back there one day. You could keep that property and move to the DC area because of how high the loan limits are here. So you probably, in most cases, will have enough entitlement to carry both mortgage payments without having to necessarily put money down, or if you do have to put any money down, it would probably be very minimal. There is a calculation for us to help you figure out if you have enough bonus entitlement to carry more than one VA property at a time. And that's something that only takes us, again, a couple minutes to kind of figure out based on the calculations and programs that we have available. In the market, we see a lot of questions surrounding, you know, can you even get your offer accepted with a VA home loan? And I think a lot of that is just a lack of education on the realtor's perspective, or not really understanding some additional protections that veterans have. VA loans perform at the highest level, so they have the lowest percentage of default right now. So they are really low risk to banks based on how they're guaranteed by the VA program. And also the information about the appraisals, which is something that is unique to VA appraisals in comparison to conventional FHA, USDA, or any other portfolio products that are available out there, is that when the appraiser is conducting an appraisal report, if they cannot confirm the value that matches the sales price, they will and are required to contact the agents and anyone else involved, like the lender, to notify them, like, I need additional information to determine how this value and this purchase price was determined. And we then have a certain amount of time to return that information so they can complete the report. With other programs, that report gets sent out as is. They decide what the value is, we're just kind of stuck with it. And there's no negotiation unless we can officially put a renegotiation together back for the appraiser to consider. And that is a lot harder to get achieved than someone who's willing to give you the opportunity to give the data up front. Because once the value is determined, very seldom do we see the value overturned. But if they're asking for help on the front end with information that the real estate agents might have when they decided to list their property or when they had their client sign for their contract, it makes it a little bit easier to navigate that process. What questions are you seeing from clients in the market right now?
I just realized that I was on mute. But I do have a question that recently came up, and he didn't ask it personally to be in this, but I had a client who was trying to do a fix or flip or do a duplex purchase. I believe I sent him to you. And his question was about assumable loans. So could you touch on assumable loans and how that works out? Because what I heard, and I haven't done a deal with assumable loans yet, but what I've heard is that a veteran can assume another veteran's loan at a lower percentage, but it's only for how much is left on that loan. And then they will have to come up with the difference between the loan amount that that current veteran has and the purchase price gap.
So
So
that is correct, and makes sense for a lot of people that are looking to assume a property. Let's say people are lucky and they have a 2.5% interest rate on a VA loan and they want to sell it. But chances are, if they bought during that time, they're sitting on a substantial amount of equity. So if you're going to buy a house and it's worth 500,000 and they have a remaining VA loan on that at a 2.5% rate at 2.5%, unless you have the $250,000 to cover the difference between the current value and the purchase that, or the assumed mortgage that you can pick up, they're not going to give you $250,000 of their value of their home, right? So like you're going to have to come up with that. There are some secondary lenders out there, meaning second loans, where you can get a HELOC or a second lien to place with that mortgage. But there's some restrictions on that because those also have to be assumable in most cases for the lender to agree to it. Now, that isn't something that's handled through a lender. Like if I'm not the servicer on that loan, you can't call me and help. I can't help you with the assumption. I have a lot of people that are interested in it. Whether you do not necessarily have to be a veteran to assume another veteran's loan. So a person that was never in the military could actually apply to pick up someone's assumable loan. They're subject to the same restrictions on having to pick up the difference between what's owed and what's currently due. But they also, if you have someone assume your loan, it doesn't necessarily restore your entitlement unless it's veteran to veteran. So like if a civilian or someone that was never in the military goes and assumes your loan, your entitlement's still tied into that property. And a lot of people aren't aware of that. So assumptions are out there. We see them pretty common in divorces so that the person can stay in the house and the other person can move on. We see it common if, there hasn't been a lot of pay down on that mortgage, or if someone had to move to a duty station and they just just purchased the property, sometimes that happens. The assumptions are just handled through the servicer, but it sounds great, but it's a lot harder to get achieved just based on the equity gaps and the limitations on mortgage companies that are going to do an assumable second to match up with the servicer's first loan. So
Wow, you definitely learn something new every day with that one. I mean, I knew some things about assumable loans, but hearing that outright, I do understand why it's effective for somebody who just purchased a home and had to leave maybe 3 months or a year later after purchasing. So that seems more ideal compared to somebody who has a huge gap because they have an increase in equity. Um, so I do have a few more questions, but Michelle asked two questions. She said, "Can I use my VA loan again after selling my first home?"
yeah, so you can have more than one VA loan at the same time if you have enough entitlement, or if you sell your property, they do a restoration of your entitlement.
Mm,
Unless there was some kind of hardship that occurred, like a foreclosure or a deed in lieu. In that case, some of your entitlement might be tied into that foreclosure. And of course, then there's waiting periods for when you could reapply. And that information is available on your certificate of eligibility. So that's always my first suggestion when someone calls me. I've had clients that applied for VA loans and just didn't meet the requirement yet because they were reservists. They weren't necessarily full-time active duty, so they didn't have the full requirement yet. But we pull the certificate of eligibility. It takes a minute. It basically just tells you the whole roadmap. Like, here's what we have. Sometimes the data needs to be updated, like the property's being sold, so we need to send that into the VA so the regional loan center can update that certificate of eligibility to show that that's being restored as part of the closing process. So think about, like, if you're selling a house on the same day and then buying the next one later in the afternoon, so you're not homeless, right?
mm.
That is like a little bit of a interesting time where we have to kind of like bridge that information to VA, make sure everything is lined up and we're getting the right documentation from the partners that we're working with, agents and title companies, to make sure that we're getting everything restored fast enough so there's no delays with that settlement later in the afternoon.
Awesome. And that actually ties into a personal question that I had. Could these deals be done in the same day? Because of course we never want, as a realtor, I never want one of my clients to sell their house and then not have another house that they're going into. So,
I prefer if we structure them where there is a little bit of a gap, just
mhm,
because there are oftentimes things that happen with the other financing on the deal. And if everything is just so back to back, if it's not possible, we always make it work. But if we can find a way maybe to do like a rent back for a week
mhm.
from, them you selling the property and you stay in, for that week, and then you have that week to get your settlement all squared away, and then you move out. I mean, that's much more, you know, let's, skip along and have a happy face on if it's anything goes wrong with their financing, if they're delayed from 9 a.m. even to 3 p.m. in the afternoon, it's going to have and create a lot of anxiety and stress that we, if one little thing. So if we can bridge it where there's a little bit of time in between, it's always going to give us a little bit better, like warm, fuzzy feelings and get things done, and people will be less stressed. But we understand sometimes this is not possible.
And I mean, and also the goal is to make it a less stressful process. And so that's good to know about what you recommend. Michelle's second question was, is it smart to use her VA benefits for an investment property, after purchasing her primary home?
So you cannot use the VA home loan for anything other than primary residences. Now, you can have a VA loan that turns into an investment property that you no longer occupy, but
Mhm.
it's not a program that is designed for you to buy investment properties.
That's good to know. Okay, so I did have a few questions of my own. My first question is, how does being on furlough affect someone's eligibility for a VA loan?
The furlough isn't impacting active duty members, right? So
Mhm.
it's only impacting people that are currently working for the government, as far as what we're aware of. So if you're in a government department that you're not receiving income, you're not re and we can't verify your employment, that's going to create issues for you, because we're going to need to be able to verify your source of income, it's active, and when you're going to be receiving that again. Now, there's certain people in the military or government that are not impacted by this right now, right? Like most of the Pentagon isn't affected. Like my brother's at the Pentagon, he still has to go to work every day. Um, we're seeing some delays with some of the documentation and processes that we need to get verified for some VA loans, but really the VA loan program is not impacted the way that some other mortgage programs through the government have been, like the USDA loan program. But we will, so active duty members don't really have an impact to their buying right now. It's just maybe a little bit slower in processes. Like I had a VA appraisal that took longer than usual. I had, if I needed something updated on a certificate of eligibility, normally it would be done in a day or two. And we're just planning on having a week for anything that needs to be updated, just because we know that not everyone is back to work yet with the government. Hopefully they'll be able to get everyone back to their jobs soon.
Awesome. And so you did bring up a key point. I do know that when you're doing a VA loan, that the VA Veteran Affairs usually have their own specialists, such as appraisers and home inspectors. Can you break down that process a little bit, regarding appraisals? Does the VA require that you use their own inspector and appraisal personnel, or could somebody who is a VA buyer bring in their own?
So no home loan is going to allow a buyer to order their own appraisal. It just,
Mhm.
it's not a thing. So and that's just for compliance purposes and to keep everything where there's no influence that could be directing the market based on relationships. So back in after the mortgage meltdown, they started regulating appraisals and appraisal independence requirements.
Mhm.
So that is something that all lenders have to use. Appraisal management companies or have very strict policies on how they're applying to the list that they have available based on the size of their organization. And as far as the VA, they've always operated a little bit different. They have a list of approved appraisers. So when I go in and I put in an appraisal order, it is round robin assigned to the people in those districts to pick up that appraisal. And then they have certain requirements and they submit the report directly through the VA portal, not through a separate appraisal management company that we are using for other loan programs like conventional. So there's no panel of approved inspectors, though. That is just, you're going to order an inspection with the recommendation or from, your own preference when you're doing um, those. Like there are certain inspection requirements that are on all VA loans. So like in Maryland, Virginia, pretty much this entire Mid-Atlantic region, if you get a VA home loan and you're doing a purchase, you're going to have to get a termite inspection every time.
Mm-hmm.
So a wood destroying insects report is required on every VA. If you don't have public water and sewer, those requirements are also going to be there for you to get your water test done. And every county has their own panel of what's required in that water test. And if they do not have their own decided requirement for the water test, then it defaults to the EPA requirements, which is a full panel that includes the bacteria, coliform, and also the lead, where if in the county that I live in, lead isn't necessarily on the list for the drinking requirements. But, I would want one if I was buying a place that didn't have public water to know if my kids would be consuming lead, right? So you can always add the additional water test requirement, even if it's not a part of the county regulation.
Awesome. And then the last thing was if someone decided to refinance their VA loan, would you recommend that it be ideal to do another VA loan refinance, or if it was a better deal to do like a conventional or a FHA?
So, I mean, in most cases, VA home loan interest rates are going to be much more competitive than what you're going to see on conventional. FHA is a great home loan program and it certainly helps buyers get into homes, but
Mhm.
FHA is a lot more expensive when it comes to funding fees and monthly mortgage insurance premiums. The VA home loan has an upfront funding fee unless you have any percentage of disability. If you have a percentage of disability, you're exempt from that fee, regardless if your disability is at 10% or at 100. So if you're at 10% and you are considering refinancing, uh, I always give my clients multiple products to select from to see what would be more beneficial for them. If
Mhm.
they have to pay a subsequent funding fee, sometimes that can be at, over 3%. So if we have to add that into the loan amount for them to do a cash out refinance, but we wouldn't necessarily have to do that for a conventional loan, we're going to look at the math to see which one is more beneficial for the veteran. Now, if they're just trying to lower their interest rate, like I have some clients that went with other lenders or they did builder lenders that were giving really high rates and they are, sitting at 7% or, 6.5% on their VA loan right now, they should be contacting us to do a streamlined VA loan, meaning no appraisal, lower funding fee if they are required to have one. And the only thing we're verifying at that point is that their mortgage payments have been made on time and they've made enough mortgage payments since they took out the first loan to be eligible for this. That's a really great, easy product. And I always tell everyone that I'm working with and everyone that's on my team, when we get VA streamlines, that's like a layup considering in mortgage business because it's so easy. The clients are already knowing what they need to provide. There's no surprises. There's no appraisal variances. We just need the payoff and the mortgage history essentially to get it done. And it's going to save clients, a good amount of money because there is a threshold that we have to meet in order to apply that VA benefit for them.
Awesome. Yeah, all of that was very helpful. So, Melanie, I thank you so much for answering all those questions. Can you let
Or
the folks know how they can contact you?
yeah, so you can contact me. My information will be available on the video at the end. But you can reach out to me by my phone number, which is 240-575-4765. And then, of course, we'll send out the information and we'll put it in the comments on the video as well, so you can connect with me as well.
Awesome. So thank you all so much for watching this video. Again, my name is Jerelyne Thomas. I am with the brokerage at Arla at Properties, and it was so good having this conversation. I hope this was helpful to each and every one of you. Thank you so much and have a wonderful day.